Welcome to Trading Nation. I'm Mike Santoli. The major indices sitting well off their highs as we head into the end of the year, but it hasn't all been bad. A handful of Dow stocks are still up double digits for 2018. Check out the moves in Merck, Microsoft, Visa, and a few others. So should investors stick with these big gainers? We're joined now by Mark Tepper of Strategic Wealth Partners, Craig Johnson of Piper Jaffray. So Mark, is it a market for betting further on the winners when there have been so many losers, and if so, which ones?
I think so, and we really like and own both Microsoft and Visa. As far as Microsoft goes, the tech sector has really been sliding out of favor from a sector rotation perspective, but you still need to have exposure to the space. So within tech, what you really have to do is own the names that are going to have above industry growth levels, and Microsoft is one of those companies. Cloud is one of the best spaces to be in, and Microsoft has a really unique offering when it comes to the cloud. So we're expecting cloud usage to double over the course of the next 2 to 3 years as more and more businesses embrace the cloud. But there's a ton of businesses out there that have spent a lot of money building up their internal IT infrastructure, and there's no way they're going to throw all of that away and move 100% to the cloud. So Microsoft's hybrid solution is the answer, and that's going to lead to double-digit earnings growth over the next several years. As for Visa, it gives us the ability to take advantage of both a strong consumer spending environment and also this secular trend of digital payment processing. Wages are growing again, consumer confidence is high, so consumers have the ability to spend more, which benefits Visa. And it's also kind of an all-weather stock. If we see any weakness or recession in the U.S., Visa should do well because of their strong debit card presence. So we like those two.
Yeah, Visa, one of the strongest stories of the last decade or so since it's been public. And Craig, what do the charts tell you about which one of these might actually still have staying power?
Well, I think the real question, Mike, here to ask ourselves is, so far through 2018, we've seen a market that's been a little bit more defensive than not. So you've started to see the steady Eddie names in the market, the Microsofts of the world. You've seen the Mercks and those kind of names continue to perform and perform very well. I think the real question is, are we entering a period where the market is already reflecting a lot of bad news, which we do think is the case? And so I think you're going to see names like Nike. Take a look at that chart. This stock is already corrected back to a very identifiable area of support. We think a lot of the bad news is in. We would be buying this stock here on this pullback. Now, converse that with Merck. Merck is a stock that's already been working. It's done extremely well, but we're entering an environment where I think we've already seen kind of the handoff between growth and value start to play out. So I think you're going to see Merck potentially be a source of profit taking and money rotating into names like Nike. And I think that's going to be the play that we're going to see as we move into 2019.
All right. Yep. That would show a different character for this market for sure than we had a year ago. Guys, thanks a lot for joining us today. Appreciate it. And thank you for watching Trading Nation. I'm Mike Santoli. We'll see you next time.